All right, traders, now it's time for you to come with me on your computer, open a TradingView paper trading account, and get a little bit familiar with the trading platform. So let's go ahead and hop on our computer and get there now. Okay, so we're gonna go ahead and type in TradingView.com. From here, the markets will load up. You should see this pop up. The first thing you want to do is get started for free. When you sign up, you have all these other options. As you get more into wanting to backtest, you'll start to, look into these different options that might help you. But again, you can start for free. So we are going to sign up for free. Once we sign up, we are going to use a trusted email. I'm going to do this one just because I don't have an account like this on this email. Perfect. And I don't want to pay a subscription. Do I want to receive emails? Sure, I would like to receive emails on discounts. Awesome. Now I have an account. The next thing I need to do is figure out where MNQ is because that is inevitably what we will be trading. So we're going to go here to markets, click on it, and all these other tickers will show up. We're going to type in the search bar. Mine is already popped up here, but you can type in MNQ and it should pop up right here for you. You can press launch chart. We'll wait for that to load. And as we can see, the market is showed red and green, red for bearish candles and green for bullish candles. We'll get a little bit more into candlesticks after we kind of explore TradingView. So you can keep it on the black screen with your red and green candles. If you guys seen some of my videos, you guys know that I use pink and black candles, pink for bullish and black for bearish. You can change those to any color that might suit you with this settings bar right here. Once you click settings, it gives you the colors of the bodies, wicks, and borders of your candles. We're going to talk about that in just a little bit. But as you guys can see, if I change this green one to, I don't know, let's say pink, it's changing the body of it pink. You guys see how the candle color changed. And then around it, you can still see it's a little bit green. So I'm going to go ahead and change that one to pink as well. And then, of course, we have the wicks of the candle, and I will change that to pink as well. Now, it looks really hard to see right now. So now I'm going to change the bearish candles to an opposite color. Again, the normal one that I use is black, black, black. But then now I can't see my black candles. So I'm going to go right here in my settings bar, go to my canvas, and change the black background to white. Okay. For the sake of this video, I'm not going to give you guys my same colors that I trade with. I'm going to leave it as green and red to keep it super simple for you guys. Now, what are these things here at the bottom? Those are your volume candles. These aren't necessarily like what you'll be trading with as far as the platform goes, but it is good to know what the volume is looking like in the market around opening time sessions in markets. You will definitely notice if that goes really, really high or if it goes really, really low. I'm going to explain that in just a second. All right, so I've made the background white and I've made my candles just regular red and green. We have these volume sticks down here. I don't necessarily use them on mine, but you can see the volume as well right here. If you have any indicators on your screen, which if you go up here and press indicators, you can pick whichever and it will just pop up on your screen. Depending on which plan that you buy, you'll have more than 1 to 3. I don't want these down at the bottom because I don't want my charts looking messy. So I'm going to go ahead and hide those. And as you guys can see, my chart looks super duper clean. Super duper clean. And that's my overall goal. While I'm playing around on this platform, I want to be able to utilize all of these tools to mark up my charts to get me a better understanding of what price might do. Okay, so I have this tool, which is a line tool. You can use it as a trend line to help you see the trend. We can see the price has been moving down recently because this line is moving down. Inversely, we can make a line over here again. We click on this, it says trend line. Trend line, it can go up. As we can see, price over here was moving upwards. As we can see, price over here was moving down. We also have a vertical line that we can put on the charts. This is how I kind of calculate where I am during the day. So when I use my market open, this will be the tool that I utilize. So I know I'm not taking a trade until market has come to my green line. But first and foremost, let's start off with the time frame. Okay, those are just a few tools. We'll get into a few more tools in just a moment. But as you guys can see, if you go up to the top, you can see this D at the top. This counts as 1 day. So these are candlesticks as far as 1 day goes. This candlestick is today. This candlestick was yesterday, the day before, the day before, the day before, so on and so forth. The dates are also at the bottom for you to see. You can also go down to 4 hours. It's the same exact information that the daily time frame gave us, but it shows us so many more candles. So in order to get rid of these blue lines, we're going to go back to our settings here, electronic background. We're going to make these white, the same as our background. I'm going to make this the same green as well. All right, so now that our electronic trading hours background is white and not blue, but white, we're going to go hop down and see that this is the same information given to us on the daily time frame, just more information. So we can see, I'm going to make this super clear for you guys. I'm going to use a different tool now. I'm going to go down here to the 1, 2, 3, 4, 5, 6 tool on our side here. Click the pathway on the daily time frame. I'm going to mark out some structure. We'll get to that in a moment, just so you guys can see how it's the same exact thing, just more information. So we can see that this is pretty simple. I've marked out an area where price stopped. I marked out an area where price stopped. Price kept going. I marked out an area where price stopped. Price kept going. Marked out where it stopped, so on and so forth. But let's go back down to the 4-hour time frame. And we can see now we have quite a few more where price stopped areas. So price is now here. Price came, stopped. Price came down. And we have tiny little bits of structure within that 4 hours. So this is now our 4-hour time frame, and the big ginormous line is our daily time frame. So let's just imagine here what it would look like if we drop down to the 1 hour. We'd be collecting more and more and more information. I'm going to mark all of these out, and then I'm going to change the color so you guys can see the difference between it. All right, so now we have 2 separate lines going on. We have the 4-hour, which is orange, market structure. We have the daily time frame, which is blue, market structure. So it's the same thing. Price is moving down. On the 4-hour, price is moving down, then price is moving up, then price is moving down, then price is moving up, then price is moving down, then up, so on and so forth. And if I put back this, we can see that even on my daily time frame, it's the same information, just a lot more candlesticks. Price is moving down, then up, then down, then up. So if I take all this off and I go down to my 1-hour time frame, we're going to see how that changes as well. Okay, we're going to delete our daily time frame, kind of go more to the current price action, and we're going to look at the 1 hour. And we can see on the 1 hour, price gives us even more candlesticks, even more data. So now we're going to mark out the structure here. I'll make it another color. And as we can see, if I delete my 4-hour and just look at my 1-hour, we can see that price was going down, kind of stayed in a little line, going straight across, then came down again, then came down again, came up a little bit, came down, stopped here, came up, stopped here, came down, stopped there, so on and so forth through the entirety of the time frame. So as we go through different time frames, you can see and play around with every single time frame there is, but a rule of thumb is the higher time frame tells the story. Okay, so when I trade, you guys see me trading, I only use the 1 hour, I will add it to my favorites, and I will use the 5-minute time frame, add it to my favorites, and now they are both up here ready for me to quickly use. Easy as pie. Now that we've got to use a few tools and check out a few time frames, even look at some indicators that you might use when you trade, we are now going to open our paper trading. So the first thing we want to do is come all the way up to the right corner, press trade, and then we have a list of brokers. It goes all the way down. These are different brokers that you can use in order to actually trade. So when we're going to this part and you want to open a live account later on in the future, you would pick one of these brokers in order to start your actual account, fund that actual account, and then place your trades. We're not going to do that today because we're still learning the basics, and that's perfectly fine. But as you grow, you'll start looking into these ideas, and I want you to know where they are. So they're right here, but we're going to open our paper trading. This first box has our paper trading for TradingView. So let's go ahead and click that, and then we'll press connect. Once we connect, once we connect, TradingView will give us an account balance and options to trade. Once you get this account, I want you to notice the TP and the stop loss right here. I'm going to type out what both of those mean. TP, you'll see me post about all the time, is your take profit. Okay, I'm going to zoom in on this. Okay. This is where you anticipate and want the price to go. When you place a trade, you are betting your money that price is at this current level and will go to this current level. If you are using a buy and you want the market to go higher, you will come over to the left side where our tools are, go down from the 1, 2, 3, 4, 5th tool that says long position. Once you have that long position, you'll put it on your screen just so we can see what this is doing. We'll move this around a little. So if I'm looking at this, my green would be where my take profit is at the top. And then remember we have our SL, which is our stop loss. So we're going to type out stop loss. Okay. And our stop loss is where we want to stop the bleeding. If we were wrong on where we thought price was going to go, we do not want our entire account to be blown. So if price shows me, okay, it comes around this level and maybe I was just wrong, I only want to risk this amount, not my entire account, because that would be like this. A lot of times when you hear traders talk, you will hear them say RR, and that is your risk to reward. RR, risk to reward. This is the ratio between your take profit and your stop loss. Let's say our stop loss is 82 points. We're gonna do a little bit of math today. All right, let's say my stop loss is 82 points. 82 points. And if you remember, each point is $2 if I use one contract size. If my stop loss is 82 points and I shoot for a 1-to-1 risk to reward ratio, I'm risking 1 to make 1, then my TP will be at 82. Okay, you can also see it here in the middle. we have this little risk to reward tool. That's what this entire tool is, but you can see that the ratio is there. So I'm going to drag it all the way down to it's perfectly 1, and that is my 1-to-1. So this is also 82 points. Okay, we're going to do the same exact exercise, but looking for a 1-to-2 risk reward. If you're good at math, you can already tell what our risking 82 points to make double of that is. Okay, so I'm going to put my risk to reward tool. You can create a new one, but this is just a little easier. So now let's say I'm risking 82 points, but I want this risk to reward ratio to be a number 2. I'm going to drag my take profit a little higher until it gets to the number 2. There it goes. Perfect. Well, not perfect, but you guys get it. All right, it's at my mouse, guys, my mouse. There we go. Okay, you know what? I'm done fighting it. So now that I have that, my new take profit will be 82 times 2. This is my take profit up here. This is my stop loss right here. Stop loss is at the bottom. Stop loss is at the bottom. The entirety of the stop loss is the entire stop loss. So like this would not, this little line right here, let's see. This little line would not be my stop loss. My stop loss would be the exact bottom line. My take profit would not be right here. My take profit would be the top of this line. All right. So if this is 82, what would my take profit be shooting for a 1-to-2? If you know your math, you know it would be 164. So I'm risking 82 points times $2 for one contract for 164 points. The 1-to-2 is a common risk to reward ratio because inevitably it takes 2 of these 82 1-to-1s to cover a full 1-to-2. So if I only trade 1-to-1s, I need to be making sure I'm winning every trade in order to be profitable. But this entire W, this entire take profit equals 2 of these 1-to-1s. Hopefully that makes sense. It makes sense to me. So let's say we want to shoot for a 1-to-3 or a 1-to-5. What do those look like? Risk to reward is a 1-to-5. Now we get our long position tool and we have our stop loss at 82, roughly 82-ish points, 83 points. I'm going to drag my take profit all the way until my risk to reward tool says 1-to-5. Okay, we're almost there. As you guys see, this is really high. So I am expecting a lot from the market if I'm looking for a 1-to-5. I have my 82 points as my stop loss. Somebody do the quick math for me. That is 410 points. That is a lot of movement from the market. And if you do the math on it, you are covering a multitude of losses, especially if you started off with the 1-to-1. Now, again, our goal is to focus on 1-to-2. The higher your risk reward becomes, the less likely it is for the market to play out to your actual take profit, because the markets do not move in a straight line. They move in those zigzags that we were marking out earlier as market structure. Okay, and this is our stop loss. So this is just kind of a visualization of you hearing the names take profit and stop loss, or TP and SL, or RR for risk to reward ratios. Now we are actually going to take a demo trade. So I see the market is going down. I'm going to press sell. This is not an actual strategy. I just want to show you guys and get you guys familiar with the buttons on your screen. So we're going to go ahead and just drag our TP down, drag our stop loss right here. So we can see right here, we can also use the short position when we're going and we can also use the short position tool when we are shorting the market or going for a short position. It is that same tool on the side near our long position. Click it out to the side. It has a short. I'm going to put it where I want to enter the market, drag my stop loss to just a level, and that's risking 170 points. So I want to get this take profit to 1 to 2. And as we can see, this is a ginormous move. I'm risking about $357 to make $700. And I'm going to go ahead and press my send. And now my order is placed on the charts. So now, if the market does continue to fall, I will be able to make a profit out of this trade. If market decides it wants to go up, then I will lose on this trade. When wanting to close a position, you can just press this X and then continue on with closing the position. There are a few different ways that your position can be added to the charts. If you go to the right on your platform and you click market, wherever the market is, wherever price is right then and there, if you press sell, that's where you will enter the market. If you press buy, that's where you enter the market. If I press limit here in the middle, I can drag where I want price to be when I want to get into the trade. So now if I just wait and I set this order, I will wait for price to come all the way up to this level before it gets me into the trade. It has to come all the way back up before it will tag me into the trade. Again, and we'll try the market order, wherever price is. If I press sell, that's where it will tag me into the trade. Again, to close your position, you can press an X. Notice on that last trade, I did not have a stop loss. I'm going to write this out so you guys can hear me loud and clear. I'm going to make it so stinking big that you can't miss it. I'm going to write it in big red letters. Hear me clearly. Do not trade without a stop loss. Read me loud and clear. Do not trade without a stop loss. Why? If it is not obvious to you, if you place a trade and you do not have a stop loss and the market decides it wants to shoot opposite of the direction that you are aiming for, you could potentially blow your entire account. All of your hard work in your trading can be blown in just a blink of an eye. I don't want that for you. So I need you need you to trade with a stop loss. That means before I enter a trade, I'm going to get out of this trade. That means before I enter a trade, I need to make sure I know where my stop loss is going to be, how much my stop loss is going to cost me. And then even if I don't have a TP, which again, I don't recommend because I don't think that you should use your mental capital either. Before you place that trade, you need to know how much you're risking and how much of a stop loss you have. If you do not have a stop loss and price goes in the opposite direction, you can lose your entire account. That is where you are becoming a gambler. A lot of people think trading is gambling, and it is not. We are risk managers. If you cannot manage your risk, you are gambling, you are going to lose. It's going to hurt you. You're going to lose a lot of money because you decided not to use a stop loss. As you're becoming a trader, you have to learn the rules of trading. Where to find our long and short positions, what our risk to reward is, how can we look through the different time frames and put indicators on if we need to. We can now move on to what these candles actually even mean. Continue to the next video to see what the candlesticks mean and how we can read them on the charts.